This is our Forex blog for March 22nd, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. We have the real-time strength or weakness of each currency on the top in histogram format, and then underneath that we have the daily, weekly, monthly trend. The real-time tool is made up of 5 of our best statistical tools that we've developed over the last 6 years. 3 of them measure the direction, in this case the dollar's moving versus all the rest, and 2 of the 5 measure the intensity of direction. One is a bar by bar, very short term, 5 minute by 5 minute by 5 minute intensity compared to the last 20 days average for each currency at that particular time of the day. And also the other one, the last one, is about a 30 or 45 minute statistical intensity. So we average those together to give you a very smooth, very easy to read one indicator panel that uses 5 of our best tools. Half of the weighting goes to the 2 intensity tools, and the other half goes to the directional one. So anytime you see something with extreme strength at and above the 80 level, followed by less weakness, usually that strength resumes. If the daily, weekly, monthly trend is also up, then it is even more likely to resume that trend. Sometimes you have a mixed day like today where the weekly, monthly trends shifted later in the day. But you can ignore the daily, weekly, monthly and just trade with the real-time momentum if you want. The dollar and the yen are both strong. You can see the dollar has a less weak weekly and monthly trend than the yen does. And notice when the yen has incredible weakness right here, the dollar really isn't quite so weak. So that's why we have all these tools on here to improve your odds. The Australian and New Zealand are weak on both time frames starting the day off. So you'd want to be looking to sell the Australian dollar and New Zealand dollar starting the day out. Let's scroll this chart back. Notice this currency falls off a cliff last night. The hourly moving average is in the middle. Typically when a currency is above the hourly, it's more likely to go up. Once it breaks down underneath that hourly, it's likely to go down. And I do about 30 or 40 minutes of Fibonacci analysis work on the longer term charts each night to show you very high probability areas. You can see this was the area, and it starts redrawing it over at midnight. But you can see this was major support here. It really didn't want to go underneath that. Usually when you see our fib levels and they're underneath the lower white containment band, you're going to get a reversal. And the lowest one is the Fibonacci retracement level. These are both fib targets, and this is a Fibonacci retracement level, as is this one. So these are 2 major areas, and you can see it touch that level to the pip and then reverse back up about 42 pips. So if you see currencies, momentum kind of slowing, and here's what it looks like on a range chart. This is primarily how I trade, using 5 or 6 pips per bar range charts. When you see it get down to that level right here, and this is a tool called Build Your Own Trend, it uses our best statistical tools, and you can create this tool with any weights or settings you want. It's called FX Build a Trend Histogram. As you can see, I give 15% weight to this one, 15, 10, 15, 15, and 30. And this is fully explained in our videos. I like it better, and it tends to give very good divergence readings. If you get a little mini double bottom like this, where it's extremely weak, followed by maybe visually half as weak, it's very likely to reverse. So you can, on a range chart, use our intelligent trailing stops, which use the same technology, and it knows if the momentum's up, it has a wide stop. As soon as some weakness comes in, or the strength starts to slow at a dramatic pace, we tighten the stop. So you can see this got you in here at 49 and out at 75 for about a 25 pip win. Once you're in this trade here at 49, notice the trailing stop was at 36. You only had a 13 pip stop there. One of the keys to trading is having small losses in bigger wins. Let's take a look at the New Zealand dollar. Remember, this one was weak until about 4 to 9, and then it started getting weak again. So before 4, you could be looking for New Zealand dollar sells. Obviously, this one dropped. And when it's underneath the lower white band, you got to be really careful selling, because most of the time the lower band is where it's going to reverse. Notice my Fibonacci profit target level pretty much was the low of the day. And this signal right here also shows a very high probability reversal. Typically when you get these big yellow dots, the market reverses within 5 to 10 hours. And typically at the minimum it goes back up to the hourly moving average, which is 40 pips away. If it does go lower, it virtually always goes no farther than the 1.618 fib target. So let's scroll forward today and see if it happened to get down there. and it never did, mainly because this is a major reversal signal. And again, once you see this, if you see a double bottom right here, you might go long when it starts to go back up here at 70. If you got out at the trailing stop, you made 12 pips. The hourly moving average is a major resistance area, which is right around 90 here. So I went up 20 pips. You might have exited half your trade here and your other half here on that particular one on the counter trend. Earlier on, trading this, looking for shorts when it was weak, you might have went short right here, got out with a small loss, got short again here, small win, and then this last trade here, when it did go back down, it pretty much went down to the previous low. I always look for double tops and double bottoms, and most of the time I will exit at the very minimum half my trade there, unless I see incredible momentum, pretty much pegged near 100%. You can see later in the day the dollar and the yen were both incredibly strong, and the weekly trend shifted up in both of these currencies. Another one that was weak was the CAD here at 7. It was never really strong. So anytime you see a currency like this where the daily and weekly trend's down and you have almost no strength there at all, and then you have momentum to the downside, that's usually likely to continue. It's pretty much chopping around, not going anywhere, and when the momentum finally comes in, it's to the downside. So the CAD yen is an excellent one to be selling around 7 and afterward. Okay, so here's a currency that is underneath the lower band. It's also coming up to the second Fibonacci target level here. So this is one of those trades where it's not really likely, because it's already gone down a lot, to give you too many pips. If you're short right there, typically what I do is draw my trailing stop over the bar's high, and it really didn't fall that much. It went from 28, you might have got out of this trade here at 10, you made 18 pips. Wait for a pullback, notice extreme weakness, no strength on the way up, and you have a nice little 30-minute sideways rectangle right here. You go short, came down, really can take out these lows right here. You might have been out of this at 83.01, short at 20 for another 20 pip win. And again, it tried to go up, failed to. Anytime you have a double bottom and it doesn't get a bounce off of it, usually it's going to go lower. You go short again right here, and don't be greedy. Draw your fibs on the last wave down. Also be aware of where the previous swing low is, and you have the fib target of this one and this one both lined up. This is a good place to be looking to get out of your trade. I would have got out of the first half here, and the second fib targets are right down there. Good place to get out of the second one. So you might have made about 40 pips on that trade.